Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today's Thursday, January 16th. Michael Boutros with you on the horn. We just got the release of U.S. retail sales coming out stronger than expected. We got a clip of 0.7% ex auto. If you strip that out, you're at 0.5% versus a 0.4% clip. So pretty decent. Dollar is at support, coming into a nice region. Euro just pips from resistance. So we got a lot to look at today. Good morning to you, Iman. Hope all is well to you as well. Pete, Jay, Iman, Aurelian, Pooja, great to see you guys all in the room. So on the menu today, we're going to go through DXY, Euro, Swissy, Gold, Dollar CAD, Aussie, Kiwi, Sterling, and we'll take a glance at Dollar Yen. It's not really doing much, but any other trade setups, as usual, guys, feel free to throw them on the message board at any time. Here's what we look like. So DXY, we were talking about this yesterday. The level in focus is 97.11. We just came off that right now. Retail sales obviously giving this thing a little bit of a boost here. So expect a little bit of a bounce. Near-term resistance now drops 97.30. Bearish invalidation yesterday, I had it up at yesterday's high. Okay, we marked 97.44 on the report. We'll drop that down just to the weekly open at 97.39 at this point. So all things held constant, broke resistance. Now checking this is a critical area of near-term support. It's the lows that we made back in November of last year. The opening range high for this month. Okay, here's your 2020 open. So there's a lot here. Former slope resistance, like I said, now support, uptrend support. Look for a reaction here. The pivot below this is sort of the resumptive trade for the dollar. So if we pivot sub 97, specifically 97 down here as we nestle into the close of the week is actually where the convergence happens. But if we get below 97 in general, I think you're on your way. You're on your way toward that 618 at 96.83. But this is the first sort of hurdle that we need to get through. Dollar on the weekly charts, y'all have seen this. Where we're turning from is just a little too clean for comfort, to be honest with you. But here we are. Okay. So watch the weekly close and watch this slope on a weekly close basis. We only have one weekly close below this parallel. Okay, this light colored parallel. So if we were to close below that, it's certainly give us a little bit more on the downside here for the DXY. So things are looking good, guys, but this is the first spot. So don't get too surprised if you see a little bit of a recovery here into the US Open. Pooja says, I'm holding longs 130. It's just the 100% extension of the near-term low. Your views on targets, please. Stops at break even. You know what? We'll go out of order a little bit and hit that for you real quick because we haven't updated Sterling in a while. So any questions here on DXY before I move off? Really clean levels, guys. Stick with it. Expect some sort of recovery. Again, near-term resistance, bearish inval, next downside break, you're looking for 97 and 96.83. Here's Sterling. And here's what Sterling was looking like early in the week. So here. This was the Sunday, or this was the Monday update on the 13th. We had opened the week, slid right into that 29.90 critical target. We talked about that level for a long time. It did slip below and pivoted there for a while, but the recovery is taking us right back into that slope resistance. Now, Pooja, we're turning just pips from it. You're long from a good entry, stops at break even. Yeah, I mean, depends how you want to look to play this. So the key range I still have that I'm still looking at, Pooja, is still the same thing that we were looking at on Sunday. It's 29.90 into 130. So that takes you into break even. I don't know if you want to shave a little off here. The topside breach of last week's Friday high, this was the non-farm payroll high, is what I wanted to see to validate the breakout. So look, for all intents and purposes, you're testing downtrend resistance. Treat it as such. We're both on the same page, I think, Pooja, as far as what we think with the longer term Sterling tactic, right? Here's the weekly chart, big region of support. My personal sort of favored move was a drop near 29.20, 29. For me, that would have been like the sweet spot, but hey, the median line held on two separate attempts, late December and just now. So again, all things held constant, you're coming off of uptrend support, right? On the weekly chart. But the issue is just the near-term momentum play. Here's what it looks like. You would have wanted to see a little bit more of a recovery. Now, it might end up being something like this that could build, or something like this. Sterling sometimes takes some time, but this is sort of the first spot. So look for slope support, 30-30s maybe, to hold. I just don't want to see this thing start to make a new low. Let's just say that. And then if we get into 30-90s, I would definitely, Pooja, again, just my humble opinion, I would definitely be shaving a little off, or even bringing up your stop back towards, up above that 130.15 level, maybe up above this low, looking for the crack, but do something here. And then the 618 is a nice target, especially with where it is on slope, right? Nice pivot all along that. You're basically looking at a region in like 131.60s, 131.50s. So I'm expecting some nonsense here, right? Either a spike high, then a pullback lower. If it pulls lower into the U.S. trade session, if dollar does find some ground on this retail sales, which I doubt it will, but if it does, you kind of want to start to see that near-term channel hold to the upside. Does that help, Pooja? Nice entry on that. You nailed it. Yes, thanks, she says. Okay. Here's the 60-minute, and I've been watching this one closely. I've gone as deep as 30 on it. Starting to look a little tired. I wouldn't be surprised if we get that, a little bit more of a kickback. But at the end of the day, the only thing I would also highlight is that I was watching this thing and hoping for a cleaner weekly opening range break. So this is your weekly open, right? You kind of made a low, you tested the weekly opening range highs, failed again. This break, I was hoping to materialize into more of an accelerated move. So again, weekly opening ranges can be very helpful, but when they're taking shape just below a slope, I'm not going to play a break between here and here per se. It's too tight. So you're going to want to wait to see if that slope gives out. Looks good though. Okay, awesome, Pooja. Glad to hear that. All right, so that's sterling in a nutshell. Liking it. This is like a classic sterling move. False break of the lows, overthrow of the highs. We just need to start to build while above 130.13, that high that we made back in October. All right, let's go back to euro, number 3. So this is what euro looks like. So again, very, very akin to the DXY and where we are broader prospects as far as the weekly charts are concerned. Just want to highlight again, I talked about this on Tuesday, on the whole, the one concern that you have if you're trying to get into a euro position that you want to kind of sit in is that on whole, you're not near any extremes. You're getting closer now, but where we started the week was sort of mid-range. Remember, the critical zone for euro remains 112.09 on the upside. It's the 618 from the drop that we made back here in June, and then you have the slope support, which we talked about early in the month and in the week, and then the 618 right at 110.16. That's sort of the main play area, at least for the last couple of months here for euro. So the onus is still on a break above 112, right? This is what the daily chart looked like. Really clean bounce. The level where returned was just ridiculous. 109.12, 110.79. Okay, that's the 618 retracement of the advance off the lows we made just in November. 100%, 2 equal legs off the high that we made in December. Slope support, it's also a 618 of the parallel series from that pitchfork off the low. So much significance, right? And so many 618s. And I'm a fib guy, so that just puts me in like a kid in Toys R Us, right? So really nice bounce. Where does this fail here? I peeled this out way too early. Little concerned here as we kick back. I'll show you the near-term chart, but I just wanted to highlight in the daily, this is still your key zone. That slope line, okay, still the slope line coming off the highs that we made for the year. It's a 3-point touch, so it's a confirmed resistance that converges on that 618, 112.09, basically into the close of the month. Monthly open resistance at 112.22, and that's why I put that as the breakout level as far as like what we would need to see the next leg up. That would be an objective break of the yearly highs, the yearly open, the monthly opening range. I mean, it's there. So daily chart has us looking a little bit more hesitant here as far as the long side's concerned as you get closer to the median line, could get some kickback. Where do we look for support on that kickback is where the intraday chart comes in. All right. And here's the levels that we were looking at yesterday. So no change to any of the dollar levels. Just tested 97.11. Here's euro. Hit that 100% extension, 111.66. We turned right ahead of it yesterday. We finally got that clip just now. The parallel held, and we're holding resistance. Okay. Slight divergence on momentum. I do want to note this subtle change in momentum. Again, always keeping into account, you want to be looking at the close, price action with a really slightly higher high, the oscillator with a really slightly lower high. Those tend to be decent signals. Now you're looking at a 2-hour chart, so you also obviously want to take into account what time frame you're looking at, but even on the hourly, even on the 30. All right, so expect some pullback. Would you want to play? I don't know if I would want to play the, let me take a step back. If you are, there's definitely an opportunity there for, if you're a real near-term guy and you're really close to price action, yeah, you'd want to be short already. But don't get overzealous on that trade. That's counter trend. You want to be super light. What we're looking for is a pullback here to get us a little bit better of an entry. If you're on the short, a level to be looking at, I mean, 112.30 would be ideal. I don't necessarily want to see it get that deep though. Yeah, watch both of those levels. That's kind of your near-term bullish invalidation zone now. Okay, what is the first support from that pullback? Is it 111.25? I would say 111.40. Look for some sort of possible pivot at that 38.2 E-man right here. This is bullish inval, near-term support and bullish inval. Downslope support, current channel operative uptrend support, and the 50 of the advance. Obviously, 50 is not a real fib, guys. It's just, you know, half the move. But you also have the swing low for the opening range of January. So I'd be comfortable putting 111.25 as a near-term bullish inval. If you get downside exhaustion that deep, I'd be looking for possible entries. I'd be looking for an exhaustive mood, a long wick to trade against. You know what I mean? If we go back below 111.30, shall we look back to 110.80 and 110.90? Yes, Eman. My humble opinion, yes. If 111.25 cracks, you have an issue. You have an issue because you've come off downtrend resistance and now you've broken the first level of downtrend support. That in and of itself marks resumption. That's like the hallmark of a resumptive move. Does that make sense? So for sure, the risk below 111.25, I think, is much deeper, in my humble opinion. I mean, you always have the weekly opening range and the weekly opens as sort of levels of which, if we were like to wash out on something, some sort of news, it might spike down there, break this, spike down there. Then there's always a possibility, man. But all things held constant, a grind and start close below 11.25 would have me thinking a new low, like somewhere in this zone. That is a critical zone, like critical. And even on slope on the daily chart, whoops, I'll mess up my levels. You know, then the upslope starts to come into that for the larger picture here too. So, okay, appreciate your effective opening. Hey, you're more than welcome, man. Cheers. All right. Now, just as a side note, as we continue, for those of you who are in the long, or if you're still trading the long, 1186. If this pops, expect this to be an accelerated move. You know, just a study of price action in the zone between 111.86 and 112.09 has seen a lot of like real quick moves on the break. They're accelerated. They usually see you know, turnaround or failure, but they usually continue to go right through. So if we do see the breakout of downtrend resistance, expect this move to be big. still watch for reaction here. Remember the longer term slope that goes there, basically into the start of next week. Okay, Swissy, another beautiful one coming into its slope support. Here's what dollar Swiss looks like. Longer term picture for dollar Swiss isn't all that impressive, but here's the weekly chart. Don't really like the positioning here and kind of just want to see what this looks like on Friday. The level we talked about, and we've tested it now, this is the third consecutive week, was 96.71, 96.60. Look, it's the low that we made back last year in August. It's the 618 extension from the decline off last year's high. The first week of the year, we went through it, then closed above. Second week of the year, did the same thing. You know, like, I don't know. If this holds below it, I guess it's a close. We're still looking for 95.88. But we need to see things hold 96.71 on a weekly close basis. Dollar Swiss on the daily looking cleaner. Okay, there's a pitchfork just off the late 2019 highs. It's been beautiful. Turned at an exact, literally 1 pip off, the 100 off the low. Corrective all over it. Turned. It's your first area of slope support. Convergence with lateral support comes down lower at 618, 95.88, sort of the nice zone I think we should be looking for here. You also have just lower, like a couple of pips lower, the actual close, the low day close for September, which comes in at 95.90, but you get the picture. Or excuse me, is it 95.90? Close is 95.80. So this zone right here. That's where I'm looking for a little bit bigger of a reaction, but look, I don't want to get stubborn on it. At the end of the day, you're marking some divergence into slope support. It's the same trade that we're looking at with the euro, right? Don't be too surprised if you get a little bit of a recovery, but at the end of the day, you're looking to use that. Here's the intraday. Okay, here's the 240, just to zoom in out a little bit. It's pretty darn clean. Okay, so we're just sitting right down here right now. So resistance 96.72, near term bearish. You really don't want to see this thing pop through 96.88. Okay, like I said, that's kind of the zone we want to see hold resistance. Next downside is going to be that key 618, 95.88. Play accordingly. If you're holding shorts, a good zone to start taking a little off the table. Bring down your stops, break even or better. If you're looking for new positioning on this one, I wouldn't be as inclined to even play the pullback. For the question earlier about whether you would play the euro short, on this one, I wouldn't even try to play the recovery as I wouldn't be as tempted. Let's just say that. The upside on this has just been really minimal as far as the rebounds, and it's been kind of hard. So if you get a slow grinder or a little bit of recovery, exhaustion near 96.70, 96.88 would be ideal. You're still looking for that drop into 95.88. Questions? Man, this thing is just, I think it's been under the radar for us. This was the update on the 13th. It was just a perfect setup. And even prior to that, here's the 9th. We followed this thing with a bounce off support. We've been following the same upslope, right? For how many days now? Came right into slope resistance, literally, turned, and just broke all the way right back to the parallel again. Super clean setup. All right, so that's dollar Swiss. Last but not least from last night, gold. Here's what we look like. I'll be putting a piece out on daily effects with this today. Look, this is still, in my humble opinion, the same exact trade. I know Iman, Puja, you guys both follow this very closely. It's the same exact trade, even if we get a little more upside, okay? I wouldn't be too surprised. I'm still looking for exhaustion. Let's just say that. Now, I was doing an interview yesterday, by the way, with some company, IG in the UK, for a podcast, and they were talking about gold and how all this concern with Iran, and then you have the trade deal, which we had phase 1 yesterday, but is that really material? Is China really gonna be able to buy it? Are really gonna be able to hold them to their feet to the fire with this? And the tariffs are still on, so gold should be well bid. All these arguments may be right from a story standpoint, but the technicals don't change. We came off a big zone. This is the pullback. All things held constant. We're still in the confine. We're still looking for that exhaustive downside move. Okay. I don't know if that's it. It could be it. The only thing I look at on a weekly chart when I look at something like this is this simple line and then where we bottomed this week. Kind of freaked me out a little bit, right? Um, but you'd expect a little bit more of a washout than you did back there. Some other studies that we were looking at and that we were talking about in the podcast, I mean, it's just, I guess it's worth just bringing it up to you guys here. I know you guys are big on gold. Is the correlation, and they were bringing up correlations with, with the dollar and how that looks and all that good stuff. Here's what the corollary track looks like, okay? And if we take this to like, 52 week, smooth it out, and you look at something like this, the correlations have actually been breaking down. You don't really want to spend or put too much of an emphasis on those corollary stories that you hear per se, right? Here's an overlay of both of those charts that you see here. This is the DXY versus gold on the weekly. You could see that the correlation's actually been pulling back from the standards that we were looking at basically late last year. You can even take a step further on this. I know I'm getting into the weeds. I hope I'm not losing anyone. Right, and do like a 12 period, so like a 3-month rolling average. And even when you do something like that, you've seen that the correlation has kind of peaked to where we peaked on the entire advance throughout last year. Remember, the inverse correlation is the one that people run with, right? And that's the larger one that you would tend to see. Here is what it looks like versus the yen, and you can see that it's actually. We'll have to change that. Oops. All right, there's that same corollary study versus dollar yen, right? And you can see that historically, actually, over the last couple of years, this inverse correlation has been much even stronger than what you would look at if you were to look at like a DXY, right? Even this correlation on the downside. So looking at this right now, you're still looking at this correlation on a 3-month rolling average, basically flattening out. So the correlation is basically null right now. And when you liken this corollary study, when's the last time you were coming back from a corollary pullback like this? Was right here. This was the start of last year. Okay, you saw a little bit of a washout into the start of the year, but gold basically ran out, held for a while, pulled back. You saw that corrective pullback last until April before ripping in Q2. So you could envision a scenario where gold finds some resistance at these major key levels. You see a little bit more of a pullback, even if the pullback doesn't necessarily materialize like deep into the 1400s. It could last. It could last for a while before the next inevitable breakout. So just some food for thought. I hope I didn't get too deep in the weeds there on some things I was talking about on that podcast you guys might hear later on. But for gold at this point, I'm all about this slope. I'm all about this slope. Weekly open resistance is 1562. Like I said, even if it gets up there and fails, that would be a sweet spot. You got the median line and upslope resistance. 1535 is the weekly opening range low. That just happens to be the median line at this point into the close of US trade today. Areas of interest where you might start to look for a little bit more of an exhaustion trade if we break lower is 1520, which is the objective yearly open, not Mike Boutros' opinion, not Jamie's opinion, fact. And then the 618 retracement of the advance, again, fact. 1508, 1509. If we were to venture down there, I'd be more inclined to start looking for like basing, more for guys who are looking for the longer term trend or longer term move. But from here, I'm still weary on advances. So keep that in mind. Bearish invalidation 1585, still steady. 1586. Questions on gold. That is number 5. Okay. So now let's get into some of the stuff that's just on the rip today. The com block. We'll start off with dollar. I'll tease you. We'll start off with dollar CAD, which is the one that hasn't really made the move yet. Although the downside break of that channel was pretty sweet, kind of starting to lose a little momentum here. Here's what it looks like on the 120 minute. Here's what dollar CAD looked like earlier in the week. You know, we've been tracking this one pretty well. It's been in this same exact pitchfork for the entire year. Okay, here's the 2020 Open. So clean, so clean. We started off the week talking about this zone right into 30, 46, 30, 50, right? We were straddling that into the open. Really nice bounce here. Failed at the opening range highs for the week. And heading into Friday, the weekly opening range is preserved. Here's your Monday, here's your Sunday open. You set a low, you set a high, you test the high, you test the lows, look for a break of this range for guidance. And this is a perfect example, guys, of how, again, even when the opening range breaks, you can't ignore structure. So there was an opportunity to trade this 100%. This was a great break. You had a tight stop against the high. First target, your second target didn't hit. It's just below the weekly opening range. So there are plays within that zone, but before you start holding positionings or kind of sitting in a trade that you think might have an extended play, you always have to be mindful of the broader, just the basic structure that you're trading within. So near-term resistance still 30.50. If we pop through that, you could get another run on 30.75, but at the end of the day, it's still just a simple weekly opening range. Preferred move is to the downside. But again, the break that you saw in the dollar, okay, the break of the weekly opening range here, perfect move into support here, hasn't really manifested per se in dollar CAD, still holding the initial Monday, Tuesday low. So on a trade like that, usually tells you that the downside pressure is not necessarily here as far as the dollar is concerned. So I wouldn't get any stubborn on this, guys. If you're holding anything short, if it pops through 30.50, you're going to see more lateral. It's still the range of the week. Ideal scenario, you start to see failure into that zone, okay? You start to see failure at least. The other thing I want to know is that the weekly open is right there as well. I didn't even highlight it because it's right here. It's literally just above 30.50. So if you get back above that, you know, it's just a range. At the end of the day, ideal scenario, this kind of fails, even here or on a spike higher, gives you the drive down towards 30.28. And this is the sweet spot. My favorite Fibonacci confluences, I show you this anytime I see them. 100% extension from the decline off the high, 618 retracement from the ascent off the low. Really nice zone. Happens to be a big figure, 130. All right, so not hesitation is the word on all of these declines in the dollar, right? At this point, you want to be a little bit more hesitant. It's going to slide a little because the dollar got a little bit of a bump higher, a recovery near term. Questions, comments on dollar CAD? May offer some guidance. I hate to clutter up the chart, but we'll see if that offers anything. All right, that was dollar CAD number 6. Aussie and Kiwi. Here's the fun stuff. All right, let's do Aussie first. So that just came into the first target of resistance that we were looking for. You guys know where I stand on Aussie. I was looking for the pullback to get long. I might have been a little bit too overzealous on this one, kind of really being too picky with the entries, but you got a reversal, okay? And it failed basically to break the weekly opening range lows. We did push through the weekly opening range highs, but guess what? Here's resistance and the first level that we've been talking about, a major pivot zone. Don't take my word for it. Look back at price, okay? Resistance, 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 the break, accelerated run. Support, the break, accelerated drop. Here we are. It's a longer dated 618 retracement and a longer dated 1618 extension. Here's what it looks like on the daily chart. Okay, from the drop off the high that we made back in July right into the yearly low, governed the highs in October, governed the highs in November, spike high failed in December before the break. It's now on the median line of uptrend resistance. So Aussie's at its first major inflection that we were looking for. Again, here are the charts. You know, the weekly chart, again, there's not much to write home about there. Here we are, pushing right through here and settling right around this zone. This is the break that you need to close above to get the resumptive move. Again, very much akin to the euro, right? You've stretched into the first zone, DXY stretched into the first support zone. Here's the pullback. Get a little bit more defensive. Let's see. One other thing I wanted to measure real quick is just this advance right here. Okay, I just want to leave those targets on there for now. Okay, so the focus here is all about this exhaustive pullback. This is going to get the same type of retreatment that we're going to use here on Euro, on DXY. Want to see what happens on this pullback. Losses should not get deeper than weekly open support at 68.97 if this is still going to head higher. Okay, if we settle back below that, slope support, well, you could see the weekly opening range lows tested. Okay, that's like 68.76, but basically you get concerned that you might go for the more dominant slope that's kind of been controlling this advance. And that takes you basically 68.60. Don't want to be sitting in that trade. So look for a reaction here. 100 off the low, even if this bounce is corrective, would still leave room for 69.47, but I'm not going to kind of target that when we're looking at a major pivot in price like this. Okay, I already see the people on Twitter screaming head and shoulders. I see the possibility for something like that, materializing. It ain't there yet. Okay, it ain't there yet, and it's way too early to be mentioning that. So look for a reaction here. I'm definitely 69.30 is the level, and we're here. Pistol to my head, this thing pulls back from here first. A little bit of room on downside maybe off of a pullback from here, but I'd be looking for exhaustion ahead of 68.90, basically ahead of 69 if we're still heading higher. Top side beyond here, 69.47, 69.62 is the basic 618 of the drop. Beautiful level. Questions on Aussie? Now, the easier trade or kind of to get into would have been Kiwi. Okay, and this is the one that is kind of a little bit of a fake out. Looking for, you guys know, 65.69 or 65.45. Here's the wick right ahead of that 25% line for the parallel. This is the same parallel we've been following, guys, off of last year's low from September. Do you remember this thing? We broke the highs, rallied, broke the lows. It offered resistance again at that same slope. We sat in it. We said, let's keep it and see what happens. Median line support, median line resistance. Look at that. So we can scratch this at this point. Broader bullish inval still down 65.45. If this is a true break of the weekly opening range, you want to see some follow through into the US trade session. I recognize that's going to be tough with the dollar finding some support here, but this has been one of the stronger ones, reactors. So, on the resumptive move for the dollar, you're still looking for 67 on the upside. Questions on Kiwi. Here's what the daily chart looks like, by the way. Really nice momentum signature too. Unlike some of the other ones, also something I like to consider a lot is just looking at the momentum profile. You can see that just where the oscillator is placed, where the profile is placed here, a little different, more aggressive on Kiwi, right? We didn't even get down into the 50s or the 40s on this pullback. Momentum spent much more time in overbought condition. These are all things that are healthy, okay, within the broader confines of an uptrend. Doesn't mean we're just going to continue to go higher from here, but for the broader trend, looking at this from a sort of a daily standpoint on the profile, it's definitely something to take note of. So that is Kiwi. 7 and 8. Last but not least, dollar yen. Not much to say here. I do think it heads higher. There's been guys on the desk in New York who have been asking a lot about this, who missed the breakout, who've been asking if we're going to get the pullback to get long again. Look, on a trade, there's a reason I've earned this name, the abomination for dollar yen, over the years. I don't expect that there's a lot of back and forth as far as when you get those breakout trades, they typically just rip and run. So look, if you get near 110.50s, 110.60s, I think that's a huge, huge region of resistance that you look for. If you get pulled back near 109.67, look for some sort of pivot reaction. That's the same critical zone of support that we've been watching, or resistance rather at this point, that we've been watching since last year. It was last year's objective open, slope resistance all throughout last year. It would necessitate a break of near-term upslope support. I mean, this is big. So if we get down here, maybe there's a trade setup. If we get up here, maybe there's a trade setup. Everything in between on dollar yen is just going to be chop status, to my opinion. So nowhere to spend your time looking for structure, looking for setups. This just isn't it. So that's all I'll say on the abomination for today. To be continued. I think there's going to be a nice trade here for us at some point, but it's back on the crap list for me. All right. Any other questions or trade setups you guys want to review? Feel free to throw them on the message board. Pete, quick look at crude. Sure. Here's crude. Man, that slope that we added on Monday is still holding. So, well, actually, I added it on Sunday. I think I threw it out there on the webinar on Monday. This is still holding. I kind of feel like you get some sort of exhaustive bounce, but that's to be sold. Here's what it looks like. Well, let me take you to first on the weekly chart. Here's crude. So after that big old weekly reversal off of key resistance, the 618 extension from the advance off the 2018 low, obviously shifted our focus lower. A level that we were looking at was 58.45. We've already validated that break. Depending on how you draw your slopes here, if you do something like this, it looks like you're basically still about to check slope support. Whatever way you interpret it, here's the daily and intraday that we've been working with. So the only thing I wanted to highlight here is this buckle below 58.30. The 38.2 is not so what's outstanding here. More so just the level of inflection that you've seen on this range going all the way back to the start of last year. You saw a break there, test of support, again a pivot on the way down. Again, when you put this on a close, it's even cleaner, right? Look at all those peaks, peaks, break right above, then test of instant support, right? Resistance, breakout, acceleration. We broke below it and it's just holding. It's just holding. So I don't know what to do with that, Pete. I'm not gonna lie to you. If any, again, a pistol to my head, I think you get some sort of exhaustive run. People start to say, hey, you know, this is a good base. Let's start to buy crude. And then that's when you sell the hell out of it again. Here's what it looks like on the intraday. Again, like you've been marking divergence basically on every low you've made since last week into that low, but you haven't seen a material turn yet. Even if you get 59.26, 60 most, this is bullish in or bearish inval. Again, my humble opinion, that's still a sell. Point is, Pete, I want to see a drop towards 56, 57. I want to see that 618 at least tested, especially on a drop like this. Now, that might be me being stubborn, me being a little bit more kind of beholden to my own analysis here, but break below slope, probably see, like I said, whiplash recovery, that is to be sold. That's kind of the mindset I'm in as far as crude's concerned. Does that make sense, Pete? Does that help? It says thank you, exclamation point. Right on. Right on. I've been coy with this one on purpose because I do like a near-term recovery, but I feel like I'm the guy trying to catch the falling knife, right? I've been doing this for too long to be that guy. So yeah, all things held constant, I do think the risk is for a little bit of a bounce there, but 59, 26, and 60, both levels to look for. Anything else? Thanks for bringing that up and reminding me. And Pete, I know you look at the SPX too. Man, there's not really much to analyze per se. All I want to show is that we've been looking at these charts for like a while. This is the same, so I haven't touched anything. This is the same chart, guys. That pitchfork that we were working with early in the year, there's the pop above that slope, extending off that high. It's been support for the last 3 days. Upslope here, 33.28, 33.25. You know what I'm saying? I'm sorry, 33, yeah, 33.28, 33.30. It's kind of crazy, right? But from a slope standpoint, those levels look for laterally 33.53. Again, a lot. Nice little rally here. You're in overbought condition, so the momentum is on the side of the bulls, guys. Not the thing to try to fight just yet. China trade deal or not, look at this thing. Look for inflection if we get through this. A little bit of accelerated move, but interesting plays across the board. Okay, so I'm going to wrap it up there. Guys, wish you the best of luck into the close of the week. There's not much crazy data on tap. I think Mish is on tap maybe tomorrow, but retail sales was kind of going to be the biggest print. And the stronger than expected read, yeah, might have been the catalyst, the fuel. We always say, man, these guys, these economic reports are not going to change trend, but they can oftentimes be the catalyst for when trend is at extremes. So we just came in some big levels on Euro, on DXY. Let's see if that was the catalyst needed to cause the pullback. All things held constant. Same type of trends exist, guys. Levels are unchanged. Wish you the best of luck. Amen. Same to you. Pete, same to you guys. Have a great weekend. And I will see you bright and early on Tuesday. Monday's webinar is canceled, guys. Martin Luther King Day. Banks are closed. Markets will be closed. Bond markets are closed. So on Monday, keep in mind it's going to be an extended holiday weekend heading into the close of this week. We'll pick things up right on Tuesday morning here on SB in the Intraday webinar. Best of luck trading. Have a great weekend. I'll see you then. Cheers.